So I'm just going to make a quick analysis on pound against the yen that is starting today from the 2nd of October to the 6th of October. Alright, so let's start with our technicals. So I'm going to have a zone here like this. Good. And then I'll have a support around this level too. A support because you can see clearly that market made a turn around that area. Alright, so you see that when the market broke this zone for the first time, it hasn't tested the zone again until here, until this place. Is that okay? Market hasn't tested this zone since it broke it, and this and last week Friday, I think so, was the first time it reached that zone again. So here I'll be looking for selling opportunities. Is that okay? That will be my bias, because I am predicting that the market is going to fall and then it will come to this level. It will fall. It has gone up. I'm predicting that the market will come to the zone again. Is that okay? So for me, if I'm going to trade the pound yen, I'll be looking for short positions. So from this level down here to this place, and I have my stop or my room for error just some few pips above the high of last week. So this won't be a bad trade to pick. Is that okay? Because the risk reward is encouraging. All right, so the original entry should have been somewhere around here. Is that okay? So this like 1:2.4 risk reward ratio, which is a very good one. So the first reason why I suspect the market to I expect the market to come down is the fact that it has approached a zone which it hasn't tested for a long time. Is that okay? There is enough space here. If you look at this area, it hasn't tested this zone for a very long time. So it is a good signal that the market is likely to drop further. Secondly, one of the moving averages that the market normally respects is the 200 moving average. So let me just introduce that into the chart. So this is it. All right. So we are going to look at how the market has reacted around the 200 moving average previously. So if we pay close attention, let me use a pointer. Okay. If we pay close attention to this place, you realize that the market bounced off it when it got near it. The second place it bounced was here. Yes. If you look here, you see a sharp breakthrough through the moving average. Now this particular move was influenced by fundamentals. That is why you have a sharp and then a sharp decline. If you look at the candle, you get to understand that it was influenced by fundamentals. I think on that day the US dollar had so many news which affected the pound as well. But if you look here, you see that there was a bounce of that region. We have another bounce of that region. Actually, if there are no fundamentals and they just technicals that are in play, then you get to realize that the 200 moving average is normally respected. Is that okay? It acts as a support or a resistance. So look at this place. It acted as a what? As a resistance. Is that okay? So the market came there. That was last week, and you saw clearly that it also acted as a resistance. Is that okay? So this is the second backup to the trade. So number one, the price is already at a resistance zone. Number two, the price got rejected by the 200 exponential moving average. Is that okay? And I think these two confluence, it makes sense. So I would be looking for short opportunities on the lower time frame. This is just a 4-hour time frame, so I would look for selling opportunities on the 1 hour time frame. Is that okay? All right.